Well, as John just mentioned, ride-hailing app Lyft reported better than expected fourth quarter revenue, while Uber also reported smaller than expected losses. However, Uber's revenue came in below forecast and its shares slid in extended trading. Well, for more analysis, we're joined via Skype by Dan Ives. He's the Managing Director of Equity Research at Wedbush Securities. Good to have you back.
Great to be here.
So, any surprises in Uber's report compared to what we heard from Lyft yesterday?
Yeah, it's really the same theme. We're really looking at companies, backs were against the wall, and they cut a lot of costs, and you're starting to see that profitability come quicker than expected. And the rebound in ride sharing, that's going to take a few quarters, but I think ultimately, you see these stocks up anywhere from 2 to 3x from the bottom. I view this as a step in the right direction for Uber and ride sharing. They continue to really be the poster child for what I would call a reopening trade, and I think that continues to be there.
So then, amid the pandemic, what's been Uber's main moneymaker right now?
I mean, no doubt, it's really been food delivery. If you look at Uber Eats, I think that's worth about $20 per share to the stock. And we've really seen growth ultimately accelerate by 2 to 3 years. So food delivery went from an anchor on the ship to really one of the key catalysts that's really kept the company afloat, moving in the right direction. You look at the Postmates acquisition, Drizzly, they're going to continue to double down on food delivery. And that's why I think on the other side of this pandemic, Uber is a healthier and more profitable company. And the street likes what it sees. And you see that with the stock making all-time highs.
So then who are Uber's main competitors then as it keeps branching out further into more of these delivery services like groceries, for example?
Yeah, this is really an arms race that we're seeing in food delivery. You look at Grub, you look at what we're seeing across the board with DoorDash, and you're going to start to continue to see price competition, a lot of consolidation. But ultimately, food delivery, we're really talking about a new age. I mean, more and more consumers didn't even know who DoorDash was a year ago. Now it continues to be an artery that we're seeing in the pandemic. It will, of course, moderate. But the Uber story is different. I think a lot stronger on the other side of this pandemic. And now that it comes down to ride sharing, you need to see a rebound there. But ultimately, Dara and Uber, they've kind of, they not just talk the talk, but walk the walk in terms of profits.
And we've also seen them really go into some of these lucrative partnerships. Talk about some of these partnerships with drug makers and the government when it comes to vaccine information, as well as getting rides to vaccination sites. And can we expect these sorts of partnerships to continue post-pandemic?
Yeah, it's a great question. I think they're going to expand those partnerships because also what Uber's trying to do, they're trying to become friendly, almost play nice in the sandbox with government, state municipalities. Historically, that's really been, the enemy. And you've seen that in London and some other areas. So I think you're going to see more of these partnerships on the government side. I think prescriptions, you're going to see more and more prescription deliveries. We've seen alcohol, I think food delivery in grocery stores. And it's really starting to become the Amazon of transportation. That's really the end goal in terms of what Uber's become, especially on a global perspective. And most importantly for the street, the red ink looks like it's in the rearview mirror.
Now, it's interesting because when Uber obviously first hit the market, it was all about ridership. People talk about self-driving cars. How is Uber really redirecting itself right now?
Yeah, and I can tell you, 20 years covering tech on the street, that was one of the more nightmare situations that I've seen coming out of the box as an IPO. I don't think they were ready for the street. Obviously, autonomous was the big focus. Profitability was nowhere to be found. Stock obviously cratered out, and really investors demanded profitability. They had to really cut and sell off some of their autonomous. And of course, pandemic comes, food delivery, that really became the life raft for Uber. And I think the story significantly changed, a lot more profitable, back was against the wall. And I think you see it in the stock and what we're seeing here. They're just continuing to take steps in the right direction. I just want to say that right now, investors, it's a risk-on trade in tech, looking for recovery, reopening plays. Uber and Lyft continue to be there.
So then what does that mean for some of these ongoing driver disputes regarding how drivers are classified, their pay, safety concerns, vaccine access? How do you think Uber's going to address these issues as it does look forward to a post-pandemic recovery?
Yeah, and that's going to be a balancing act, especially as we start to see more travel, more return to the office in summer, fall 2021. But of course, with Prop 22, which was the California contractor employee, with that ultimately defeated, Now Uber, they need to make sure they don't stumble out of the gates, because it's going to be very important as you start to see a rebound, vaccine gets deployed globally, that Uber does not continue to have black eyes when it comes to drivers, health, and of course, consumers.
Always good to have you, Dan Ives there, Managing
Thank you.
Director of Equity Research at Wedbush Securities, joining us from New Jersey.